shipping rates can also be important market indicators, and as of late, sanctions have sparked one of the greatest tanker rate rallies ever, with some rates tripling to more than 120,000 a day or more. What impact will this still have on the tanker rates and the global energy markets in general? Joining us now to talk about it is Peter Sand. He is Chief Shipping Analyst with BIMCO, joining us from Denmark. Peter, thanks for joining us. I know you've been writing about it. We talked about it a little bit last week and yesterday. I had a shipbroker tell me that he fixed a ship at $385,000 per day from the Arabian Gulf to India. A normal rate would be $28,000 a day. What is going on?
Well, it's amazing and literally mind-boggling what a bit of U.S. Sanctions can do to an oil market which was otherwise pretty flat. All of a sudden, we have drones attacks on Saudi installations, but only 2 weeks later we had the alleged illicit trading by one of the biggest oil companies in the world, provoking the U.S. Tighter sanctions on trading with that company, and that has literally spooked every refiner in the world and trader, skyrocketing freight rates for super tankers as we see them right now.
Yeah. Put it into perspective, Peter. COSCO, the Chinese company, and a few others getting taken out of the market. How many ships does that take offline? I mean, is it like 1/5 of the global fleet?
Nah, it's less than that. But talk to your shipbroker again. He may give you a new quote from out of the Persian Gulf to Singapore, reaching some $460,000 a day. It's absolutely amazing. But we are talking about a significant amount of ships right now being literally untouchables, because this is not only one of the biggest tanker companies in the world that has tighter sanctions. Now, also, just last week, we had those tighter sanctions in relation to ships calling Venezuelan ports for the last 12 months from a Chinese as well as an American oil major. And that has brought the pool up to some 500 ships in total. But still, we're talking about approximately, say, 10% of the crude oil tanker fleet. But the uncertainty and the fact that we are in fourth quarter where refiners had planned for massively high crude runs have spooked everyone, and they're basically grasping for every drop of oil they can get, and they need it right now.
You've heard of a $460,000 per day charter. By the way, it was $25,000 a week ago or a month ago.
Crude oil tankers have been loss-making for more than 2 years now, with an exception of a nice, say, dead cat bounce rally, approximately at the same point in time last year. I think we spoke about that. But from a fundamental perspective, where we balance supply and demand, being the fleets available and the demand that we were likely to see, we wouldn't have anything like this.
Wow.
But sanctions have really set the market on fire, and owners and operators are absolutely enjoying that.